Okay, hello, good evening, everyone. Please confirm if you can hear me with your emoji, please. All right, please confirm with your emoji if you can hear me. Okay, so we are going to start from where we stopped yesterday. So after this class, I am going to send the, I've already pinned all the YouTube videos. I've already pinned it in our group chat. So I'm going to update the video with yesterday class and today's class so that we can have access to it. Like I promised yesterday, I'm going to show us the aspect of materiality that where we stopped yesterday. So let me let me uh, let me share my screen. Let me stop sharing first. So then I'm now going to share that my class for yesterday. Let me share that here first of all so that we'll see where we stop. So that we'll see where we stop and probably check. Okay. So please confirm if you can hear me with your emoji, please, everybody. Hello. Okay. So this is the aspect of materiality, and I've explained everything we need to know about materiality yesterday, and where I used the revenue to explain that revenue become material if it is 1 to 2% of annual sales revenue, and of course pre-tax profit becomes material if it is 5 to 10% of reported profit before tax. Then also asset becomes material if it represents 1 to 2% of total assets. Please, I hope you can see my screen, everybody. The reason why I don't want to open the class so that nobody will be disturbing. I hope you can see my screen. So I now want to show us the real materiality, how it looks like, and I'm going to use it to explain so that we can understand it better. Okay, so I'll stop sharing this one. I'm going to share another one. Okay, please. I hope all of you can see my screen. Please, can you see my screen? Okay, so this is materiality that I prepared for one of my clients that I'm working with yesterday. And you can see everything that we discussed, everything is here. So you can see the normalized loss, loss from operating, normalized loss of profit from operating activities before tax. You can all see it. Then you can see sales slash revenue. You can see total assets. Then you can see equity and share capital. And these are the percentage represented from what I explained before. Now, that is 0.5%, then 0.5%, 0.5%, and 3%. So, how do you now set materiality now? I hope you are following. I just want to, please confirm if you can see my screen and you are following me. Okay. Now, let's look at that first one. We can see normalized profit or loss from operating activities before tax. The total amount there is 429,971,605. That is it there. Then we can also see the sales revenue, which is 2,137,000. Then we can see the total assets. Then the equity capital is 300 million. So now let's now see the percentage there. So to get this 1%, we know we said profit profit before tax, which is a normalized profit, it become material when it is 1 to 2%, what at least 1 to 2% of profit. Do you understand? I hope you remember that. Everybody, you remember that when we said it becomes material if it is 1 to 5% of the total profit before tax. So now this is the total transaction before tax. So we now and this is how to calculate this the percentage, which is that to get this 2,149,000. This is how to calculate the percentage. That is 5% of this 429 million multiplied by, divided by 100. 5%. That is this 429,971,605 multiplied by 5% of this amount. That is 5% of this amount will give us 2,149,000, which represents 1% of, that is, it become material because they said between 1 to 5% of that transaction before tax become material. So for that amount, this is the materiality. Please, I hope you are following. Do you understand the way I explained this first one? That is 5% of this 429 million will give us this amount. Then we now, that is the materiality. The second one, they said sales revenue, that is 1 to 2% of that amount becomes material. If that is revenue become material, if it is 1 to 2% of total revenue, and this is total revenue 2 billion. So 1% or 2% of that total revenue is 10 billion, is 10 million naira. Then this is the percentage here. Then you now multiply. So how to get this last amount here? See the percentage here. So these two, so this E1 multiplied by 1%, or 1% of this E1 will now give us this. Are you seeing my screen here? To get this amount, it represents 0.5% of this amount. 0.5% of 429,971,605 will give us 2,149,858. Then, so now 1% of this 429 million will now give us 4,299,715. So I hope we understand how we got this amount. I hope all of you can see my cursor there. I hope all of you can see my cursor here. Okay, so that is that about. We've not gotten to the actual materiality. I'm just showing you how to calculate materiality. Then the other one is sales revenue. Sales revenue, according to the materiality setup, we know, don't forget, we say materiality is a guideline, it's not a rule. Yesterday I explained. So I said revenue become material if it is 1 to 5%. 1 to 5%. Oh, I mean 1 to 2% of revenue, it becomes material. So still the same thing. So 0.5% of this 2 billion will give us 10,686,714. Then you now remember we said it becomes material when it is 1 to 2% of the revenue. So 2% of the total revenue, 2% of that 2 billion will give us 42,746,857. That's how we got this. Then the asset is from 0.5% to 2%. So still 0.5% of that 57 million. Of that 57 million will give us 28,640,000. Then you now charge 2% on that total asset to give us 1 billion. So equity is still the same thing. 3%. 3% of that 9 million. 300 million will give us 9 million. Then 5% of that total equity will now give us 15 million. So this is now to now calculate our materiality. This is now how to calculate our materiality. Check the formula. Keep the formula here. F what? F8. What's now F8? That is the total amount here. F8. What is the F8? So this sales revenue, see the total amount for sales revenue will now becomes material. This is now our materiality. So the materiality here is now telling us that any transaction that is 10 million and above becomes material according to this account I want to audit. Do we understand, everybody? Do we understand how materiality is set now? So materiality is set from the total revenue. Materiality is set from the total revenue. That is 10,686,714 of the 2% of the total revenue now becomes our materiality. That's materiality. We now have performance materiality. Performance materiality is now the once we pick 10,686,714 as the total materiality. That is the amount where any transaction that is more than that, any transaction that is that 10 million and above, we are going to pick as our materiality. Then we now have performance materiality. You now see that performance materiality. So when we now want to check a performance materiality on that 10 million, performance materiality is always 80% of materiality. So this is the example. Let's assume that the total expenses is 10,686,000, which becomes our material. Of course, we are going to check. So how do we now calculate performance materiality on that? Performance materiality now means 80% of materiality. It means that for that expenses that we want to check, whereby the total amount is 10 million, are we listening? Are we following? Whereby the total amount is 10,686,000, it means that any supporting document that we want to pick as sample, it must cover 80% of the total amount of that expenses. Now, we said we have materiality of 10 million. Let's assume the expenses that we want to pick, the expenses fall under materiality. So, you know, there are many things that make up of the expenses. We have maybe audit fee, maybe office stationery, maybe repair and maintenance, maybe rent. Those are the things that are made up of this 10,686,000. So performance materiality is not telling us that for us to get that performance materiality, which is 80% of the total materiality, it means that a supporting document that we are going to request for out of that total revenue of this 10 million must fall 80%. It means that at least we must be able to gather evidence that will support 80% of this total amount we pick as materiality. That is performance materiality on that amount. Do we understand this performance materiality now? Everybody, please confirm with your emoji if you are following. You don't understand. Let me make it simple for you. The materiality is 10 million, for example, and performance materiality is 80% of that 10 million. It means that all the supportive documents that we are going to request for on that expenses of that 10 million must be at least 80% of the total. What's the total? 10 million. And supportive document that we want to gather as evidence for us to substantiate that this total 10 million that they require, that we pick is okay. We must request for at least 80% of document for us to support that this 10 million we pick as materiality is reliably measured. That is performance materiality. If you understand this materiality, performance materiality is not hard. That is 10%, 80% of that amount we pick as materiality. We will have to gather the evidence. That is, the total amount is 10 million, for example, and we have picked it as materiality. It means that we want to work on it. So when we want to work on it, at least we must be able to get 80% of the total in order for us to know that, oh, the expenses is actually correct and well documented. That is performance materiality. Do we understand? Everybody. Do we now understand performance materiality now? It is simple. If we pick 10 million as materiality, performance materiality is now telling us that in order for us to determine that the total 10 million is correct, we must be able to gather 80% evidence on that 10 million before we can now vouch that, oh, this 10 million that we pick or this total expenses of 10 million is fairly presented. We have to gather 80% supporting documents in order to support our claim that, oh, that this 10 million, that is, if you are saying that the total, yesterday I talked about sample size, that if we have 10 transactions under a particular section, and instead of picking 5 or 6, we now pick 8. That 8 out of 10 represent 80% of that total. It's still the same thing we are saying here. 80% materiality is the guideline. Just like we have 1 to 2% that represents material for the revenue, it's still the same thing. Performance materiality is always 80% of the total materiality. If the total materiality is 2 million, for example, we have to gather 80% of that 2 million to substantiate as our evidence before we can now say that, oh, this total expenses of 2 million is fairly presented. I know a lot of questions will come on this aspect. Do we understand what I'm saying? Do we understand this performance material? It is very, very simple. How do I make it clear again? If the total amount, if the amount they reported in the financial statement is 10,000, for example, and that 10,000 is our materiality. So the performance materiality is now telling us that we have to gather at least 80% of that 10,000. 80% of 10,000 is 8,000. At least we must be able to vouch. Vouch means that we must be able to gather evidence of 80%, which represents 8,000 of that total 10,000 as our performance materiality. You know, we cannot check everything under that materiality. But the one that we pick as materiality, which is 10 million, for example, we will have to gather evidences. That is, the company have to provide supportive documents like invoices or receipts. That by the time we gather all the invoices and receipts together, we'll be able to gather up to 80%. That is, at least if you sit for exam and you gather 80% over 100, it means that it means that you have already almost covered everything you need to cover. At least if you cannot cover everything, you have to get at least 80% of that materiality to form your performance materiality. So performance materiality is in the sense that, so you pick 10 million as materiality, and there's one transaction that actually have that 10 million. It means that you have to gather at least 80% supportive documents on that 10 million in order for you to now write in your report that these expenses that I audited, I was able to gather 80% of the total amount reported, and thereby the account is substantially okay and it is fairly presented. Please put your question in the chat box. Don't raise up your hand. There's no time. This class is going to end by 6 o'clock. Because I'm on transit, I just have to wait somewhere and give us this class. So we need to finish this chapter. I just have 30 minutes more. Please, these are our questions. Any question that we have, let us put it in. But let me just give us 5 minutes for us to have ask our question. I'll not waste much of our time. So Chinye, you raise up your hand, please. You have the floor. Quickly, please don't delay the class, please.
Sir. Thank you, sir, for the opportunity to ask questions. So please, my question is, how do I know the item that will be used to test for the materiality?
Do you understand what we are saying at all? Do you attend the class yesterday?
I did, though.
In a financial statement, once they give you a balance or financial statement that the company has prepared, the financial statement that the company has prepared, all the transactions, okay, in the financial statement, what are we going to see first? Is it not statement of financial position?
Yes, sir.
So statement of financial position, what are the things that will be recorded in statement of financial position? Number one is PPE,
Your current
property, plant,
asset.
and equipment, Abi. So let's assume that the total property, plant, and equipment is 12 million. Abi, for example, are you following? Hello?
Yes,
I
sir.
need you to
Yes, sir.
respond.
Yes, sir.
So the total property, plant, and equipment is 12 million, and your materiality is 10 million. That property, plant, and equipment, has it enter your materiality or not?
It has, because it exceeds the
So
10
meaning
million.
that it means that you need to check that property, plant, and equipment, Abi. So
Yes.
this is, and the total amount is 12 million, for example. Well, what materiality is telling us that any transaction in the financial statement that is more than 10 million and above, we are going to sample them. That is what materiality is talking about. I hope you understand the meaning of sample.
Yes, sir.
So it means that we are going to require a request for evidences of what and what make that total 12 million. That is the meaning of materiality there. Are you following me?
Yes, I understand.
It's like you are discussing with another person.
I'm not discussing. I said yes, sir.
Okay. So now, the total amount for that PPE is 12 million. It means that we are going to pick it, Abi, to gather more evidence on it. So now, performance materiality there is now telling us that we need to gather 80% of that 12 million. That is, we need to request for supportive documents. You know, property, plant, and equipment, they will tell you that they bought an asset worth 2 million. They bought another one worth 3 million. They bought another one worth 7 million. So you are going to request for all those supportive documents of those assets they purchase. At least
like invoices
at least you must be able to gather 80% of that total 12 million. You must be able to gather evidences that will cover 80% of that total 12 million. It means that 80% of 12 million should be around that 10 million. So if you are able to gather evidences to give you 10 million, so you now put in your report that based on my during our audit report, the performance materiality is 80% of the total 12 million, which means that I'm able to gather 80% of evidences to support that the total 12 million they reported in financial statement is correct. That is the essence of performance materiality and materiality. Do you understand now?
Yes, sir. Very clear. Thank you, sir.
You know that. I hope nobody. I don't know who else has question to ask. Please, I need to finish this materiality now so that we can move on to computer in auditing. Do we understand materiality now? Okay.
Yes, you can continue, sir.
Okay. So tolerable error. Now we have finished performance. Tolerable error. It means that if company want to do error, tolerable error is 50% of materiality. That is, even though you did not gather any evidence, you are unable to gather any evidence, so you must be able to gather 50% of the total materiality. I hope you now understand now. The normal guideline is for performance materiality is 80%, but in some situation, you might not be able to gather up to that 80% because of the voluminous of that particular section you are working with. So at least you must be able to gather 50%. 50% is the tolerable error. That is, anything below 50% of materiality, you will now put in your report that because I was unable to gather 50% of tolerable error, thereby I cannot substantiate my claim as regard to the amount reported in the financial statement, whether it is of true and fair view, because you are unable to gather up to 50% as tolerable error. Tolerable error means that at least if you are unable to gather evidences, so you should be able to gather 50% of that total materiality. Anything less than that, you put it in your report that, oh, you couldn't get up to this amount of evidences. So thereby, you are saying that this amount reported in the financial statement under this section is not correct. I hope you understand that tolerable error. Hello, do we understand tolerable error now? Yes. So now, sample of audit differences. It now means that in every transaction that you want to sample, at once it is 106,000, then you pick them. You know, we have many transactions that we have many transactions that was added together to give us 12 million that we said that we use as an example of PPE. So any supportive document that is 106,000 naira and above, we are going to pick them. Then if we add all those supportive documents of 106,000 naira and above, then it must form 80% of the total materiality. I hope you understand materiality now very well. The aspect of materiality and where they come from. Yes, thank you. So this is what I want to show us about materiality and the like. So I'm going to stop sharing so that we can continue our class. Thank you. So let us proceed. That is that about materiality and anything that has to do with materiality. So now let us go to materiality in planning and performing audit. So how do we incorporate materiality while we are planning for our audit? So now let's now see. Don't forget, ISA 320 talks about materiality in planning for audit. So then now see. ISA 320 requires the auditor to apply concept of materiality at the stage of planning. That is, you apply materiality when the client has sent you all the necessary documents you requested for. Then, at this stage, the auditor must determine materiality for financial statement as a whole. The auditor must also set performance materiality. The performance materiality recognizes the fact that if all areas of the audit are carried out to detect all errors under materiality level, that objective could be achieved. But when all immaterial errors are added together, overall materiality could be breached. So what I'm saying now that I have explained this place yesterday. So in a situation whereby all those ones that does not follow our materiality, that will neglect, when we now added them together, they now also later form substantial amounts that we need to take note of. Then we now reduce our materiality. Instead of putting materiality to be 10 million, as we see in the example I just showed us, we can now reduce our materiality to 8 million or 7 million, as the case may be, because all those ones that we neglect before, that does not follow our materiality, when we now added them together, they now hold some substantial amount that if care is not taken, they will have effect on the financial statement. So that is that about that particular area. So let us proceed. Then this way of taking this risk into account and will be set at a lower figure than overall materiality. As the audit progresses, the auditor might revise materiality if it becomes aware of information which would have caused him initial set different level at that what information have been known to him at the date. So they said the auditor can also revise the materiality, whereby during the course of audit, you now see that there are some things that that it is left untouched. So you can now also reduce the materiality and proceed with it. So that is that about the aspect of materiality. Then the planning for audit under the risk audit risk model, the business risk model, the financial risk model, and audit risk as we discussed yesterday. So now we are now moving to computer in auditing. Computer in auditing. This one is very, very simple. Computer in auditing is nothing other than that we are using accounting software. What's the essence of using the accounting software? In order to make the accounting work easy. So instead of now collecting this thing, now put it in another ledger and put it in meeting, the accounting software can do that and make your work easy and simple. And when you want to call for up any ledger, the software can easily make the work easy. So that is the same uses of accounting software as being an accountant is the same thing as computer in auditing. in my office now, we use Caseware and we all use Audit Method. All these things are auditing software that makes audit work easy. There you can prepare an account, financial statement, all the accounting policy will be there. You can use it to do auditing of financial statements. So it become easy. It make work easy rather than start from the scratch, prepare the account by Excel, and start inputting all the figures inside. The only thing you need to do is just to import your trial balance and map all those transactions to their stated classification. Maybe item of revenue, put it under revenue. Item of expenses, put it under expenses. Then the software is going to prepare the account for you, and you're just going to do small adjustments, and your account will be balanced. You print it and you are done. So that is the essence of computer in auditing. It make audit work easy, faster, and make us to deliver and cover the time of audit in a short while. Please, I hope we are following. So all these things we are dishing out to ourselves is not actually what we is not actually the meaning of computer. What is computer? No, it's actually telling us directly what are the advantages of all this software in auditing. So, like I said, this aspect is actually telling us what to write. So, by the time we are preparing for our revision class, we are going to explain explicitly on how to write the exam. So, let us proceed. I hope everybody you understand the meaning of computer in auditing that I just explained now. I hope you are following. So let us see what we have here. In the modern world, where things, processes, and systems have been digitalized, auditor will need to measure up the current performance issues. The auditor may need to use computer to perform his audit work, and when his client accounting system is computer-based, the auditor will need to consider the control that are in place and whether to use the computer-assisted audit techniques to do some audit work. So what we are saying here is that the computer in audit makes audit work easy, faster, and cover a lot of time in a short while. Then, however, the company that want to audit, we auditor, we also need to familiarize ourselves with the accounting system they are using there. That is, if the company is using Zero software to prepare their account, or the Zero software, or Sage, or Advanced Sage, or Sage 50, as the case may be, we should. This is the screen I'm sharing now. So please don't. Are you not seeing my screen, everybody? Why are you not seeing that?
You can see it.
Okay, so what we are saying here
we
is
are
that
seeing it. I can see.
Okay. So what we are saying here is that the auditor also need to familiarize themselves with the accounting software that their client is using. Because if you do not familiarize yourself with it and you just collect the information they give you from the software, it might cause effect on the financial statement if it is not properly checked. So you need to also understand. And all these things generally makes accounting work and audit work easy because of the software can do a lot of things. Just like I explained that my office, we use audit software. That software can prepare accounts, financial statements, can audit, all the accounting policy and everything will be embedded there. What you need to do after you have imported the trial balance, you just map, and after mapping and you process the system, the software is going to prepare the account. It's just for you to now make adjustments and correct the distance, and boom, you print the account. The account is ready to be what? To be reviewed. So the impact of computer in the auditing can never be underemphasized. It makes audit work easy, faster, reliable, and also reduce risk of expressing correct opinion as an auditor. So that is that about computer in auditing. So now let's proceed. Using computer to perform audit in modern world. So I've explained all these things before. Okay, so however, let's go. Using the computer for an audit will allow manager to review the audit work that has been done without having to visit the client's premises. So meaning that if the client has sent me their management account and I use my software to prepare the account, I can have the same thing that they sent to me without going to their office go and be asking them, how did you prepare this? How did you prepare this? Because I have software that can actually prepare the account for me in order for me to now make review and review what they give me with what my system was also prepare for me. So let's go. Now, however, computer may be used to tasks such as, that is, the software can be used in the following way. It can help in audit administration and control. Can help in audit administration and control. It can help in planning audit work. It's helped in preparing audit working paper. You can use it to prepare audit working paper. It's helped to do analytical procedure. Then sampling software if appropriate. These are the things that computer can do to assist in what? In audit. So let's now go to COBIT. Someone asked me yesterday that in my chat that she did not understand the meaning of COBIT. I hope the person is listening. COBIT, that is control objective for information and related technologies. I want to ask this question, and anybody that gets it, I am going to do data for the person. I want to ask, and just so in a car like this, what is the most important aspect of the car that will make a car to be moving? The most important aspect there. Who can tell me?
The engine.
Please raise up your hand. Don't give me correct answer. Raise up your hand. Okay. I will call you. I just need 5 people. 5 people. So, Dolakbo, Olaiwola, what is your answer?
My answer is the brain box.
Brain box. Is that your final answer?
Yes.
Okay. Noted. Okay, you can put down your hand. Sivanos, what is your answer?
The engine.
The engine.
Yes.
Noted. That you can put down your hand. Then sorry, Mr. Abraham. Okay. Abraham, sir. What is your own answer? Abraham, oh, please. We are not hearing you. Then Abraham is out of it. Then Sokoya Antonia. Please.
The brain box.
Brain box. And the last person.
Yes,
who is the last person? So all those people, please put down your hand. Khadija, okay, your own answer. Khadija, oh, she's not there. Then
I'm there.
Yetunde,
Yeah, I said the engine.
the engine. Yetunde, call
Yes.
you.
Fuel and engine.
Oh yeah, let's put down our hand. All of us, we are wrong. The most important aspect of a car that make a car to be moving is the battery. If you like, have engine, have brain box, everything complete, fuel day. If the battery is not working, the motor is not going anywhere. Just like your phone. Can you power your phone without battery? Everybody, please respond to me. The class is not muted. Can
No,
you
sir.
power your phone without battery?
No, sir.
No.
No, sir.
No,
If you have
sir. No,
charger,
sir.
your screen
You
is
can't.
working. If you have charger, your screen is working. If you don't have battery in the phone, can the phone function?
It cannot function.
You're right.
So-
You're right. It's
so-
battery.
This COBIT is what make computer system to be working. That is all those things that they put together to make that computer, to make that audit software, accounting software to be working effectively the way we want it, is what we call COBIT. Do we understand? That is why I use that one as an example. So maybe the person that asked me that question, maybe she's listening here, or she will later watch this thing so that you now understand the meaning of COBIT. I hope this example can make us understand perfectly the meaning of COBIT. Who among us now that do not understand the meaning of COBIT here? Let me see your hands up. With this example now. So COBIT is that framework, the control that makes that computer, that software that we are using It is the thing that make them to be working effectively. It is the COBIT that make them to help us prepare the account, to help us do the audit, to help us do sampling, to help us do analytical procedure, to help the accountant prepare the financial statement, to help the accountant call up the report, the general ledger and everything. It is the COBIT that makes the computer system or the accounting software and the audit software to be working effectively. That COBIT is just like a battery in a car or a battery on your phone. Do we understand COBIT? Kemi, you put on your hand. What is the issue? Kemi.
Okay, sir. Please, can we just make it as operating system of those softwares?
Actually, it depends on how you understand it. You know, the reason why I did not say operating system is the OS. Yes, it depends. But that is why I use this example to give you the example. It is your understanding on the example before you can. That is why in audit they can never say any answer is wrong. So far you are able to justify your answer and make it reasonable. You can call it operating system. Do we understand? Because it is the thing that is making that software to be working very well. Hello, are we following everybody? Please, can I proceed, please?
Yes.
So I hope
Yes,
we now
sir.
have this wide understanding about COBIT before we now start reading through it. So that we have the reason why I just cite that example so that when we are reading it, you will understand it very well. So let us go. COBIT is an IT governance tool that represents an authoritative, up-to-date control framework, a set of generally accepted control objectives and complementary products that enable easy application of the framework and control objective. This refers to as the audit guideline. COBIT consolidates and harmonizes standards from prominent global resources into critical resources for management control professional, and auditors. However, COBIT has been developed as a general applicable and accepted standard for good information technology security control practice that provide reference framework for management, user as well as what auditor. The purpose of COBIT is to provide management with information technology governance model that helps in understanding and managing the risk associated with IT. COBIT bridge gap between business risk, control needs, and technical issue. So anything that makes that accounting system software to be working perfectly, the general control, the framework, the authoritative, the complementary products, and the guidelines set up in that software, things that make it to be working effectively is what we call COBIT. So now, let's now see the component. Please, I hope we are following everybody. I hope you understand COBIT now. Okay. So now, but in the exam, they will not ask you what is COBIT to. And once they ask you what is COBIT, they are actually telling you to state what COBIT stands for and the importance of that COBIT in audit and assurance, or how that COBIT can help the software to work very well in order for us as an auditor to use it for our audit purposes. So that is why I use that one as an example. Once you understand that one, you'll be able to now translate it and transform it in your own word and be able to write it professionally. Don't forget, anything you are writing in advanced audit and assurance, you should always try and link it to the given scenario. Though when we get to revision class, we will explain more on that. So now, please, I hope you are following. I hope you understand the way I'm taking it bit by bit. Hello, can I proceed, please, everybody? All right, thank you. So, component of COBIT. Tools needed for COBIT include performance measurement element, that is outcome measure and perform driver for all IT process. List of critical success factors that provide succinct non-technical best practice for each IT process. That is, and also maturity model to assist in benchmarking and decision. Benchmarking, that is between what you set as standard and final decision making for capability improvement. Now, we now said, so these are the tools needed for COBIT. Then, however, COBIT now comprises 6 components. you can use COBIT goes for management guideline, executive summary, framework, control objective, audit guidelines, and implementation tools. Those are the components of COBIT. Now let's now see. Don't forget, if you understand very well where I said that COBIT is that thing that make the computer system or the audit software, account software to be working effectively. So these are the components of COBIT. We have management guidelines. That is, management guidelines will be embedded in that software before it can work effectively. Now let's now see. The management of any organization has responsibility to manage the cohesion between the business processes and information system. To do this, management will have to determine the stage and expectation level control, identify the most of the important action for achieving this control over IT processes, and to define the target level of performance and performance indicator. This measurement is to ascertain whether the IT control processes are meeting the required standard. So now, management guidelines. Management have their own guidelines that they have put together before. So it's just for them to add it as the setup. When they, when you want to install any application program like this, it's going to ask you some question, put personal information and all those things. So that is where the management is going to put their guidelines that suit them. So it is that guideline that what the management puts, that is what the software is going to be working on the guideline that the okay. So if I want to prepare accounts now on that audit that I said before, so we have standalone or a small entity or group. Standalone means that the company that does not have subsidiary, meaning that once I click on standalone, it means that all the information about a standalone company is what is going to give to me in the account. If I pick group account, it means that all the information that relates to a company, a group company and its subsidiary, that is the information that the software is going to give to me. If it is a small entity and I pick small entity, all the information that relates to small entity while preparing financial statement and auditing is what the software is going to give to me. And because it is the management guideline that have been put on the software, that is what I'm now seeing as the setup. So if you want to add another setup, it is the management guideline that will also put, just like chart of account. You know, when you want to set now, you set up chart of account. So that chart of account, it is you that will create that chart of account. But the software will have its own chart of account, maybe revenue like this. So it is you that you now revenue from sales of assets. It is you that you now put that type of revenue in that chart of account. But the system actually recognizes revenue. So it's you that you now create another guideline that, create interest income, create dividend income, create investment income, create income from sales of goods. That is what management guideline is talking about, well, as component of COBIT. Do we understand, everybody? Can I proceed, please? Hello, I can't see your emoji again. Do we understand? All right, let us go. Now, executive summary. COBIT includes an executive overview to senior executive with time constraints. The overview provides true awareness and understanding of COBIT principle and the key components. It also provides framework for more detailed understanding of the concept and principle. The awareness could include planning and organization, acquisition and implementation, delivery and support and monitoring. That is executive summary. Those are the framework that you can also put in your COBIT in order to ensure monitoring. That is, in order to ensure that the executive people, the top officials in the organization were able to monitor the performance of each of the staff while using the application. So COBIT also have component of executive summary, whereby the executive, the highest official in the organization can monitor, control, and also implement policy implement policies using that software in their particular organization. So COBIT also have executive summary component as one of its functions. Now, framework. The COBIT framework explains how IT processes deliver the information that business require to achieve its objective. So that framework, like I said, you know, where I said the software have you can select the standalone, the group, the small entity, company for non-profit making organization. It's because of the framework that have been set up on the software. That is why you are able to see all those drop down as options what to pick. So if you want to add more, you just to come to the framework and add to the framework so that the computer will have many framework to work with. So it's one of the components of COBIT. So let's see. The COBIT framework explains how IT processes deliver the information that business require to achieve its objective. Framework identify which IT processes are important, fully support the business objective. The processes may include the information criteria on effective efficiency, criteria on effectiveness, efficiency, confidentiality, integrity, compliance, and availability. That is for framework as one of the components. Now, control objective. Also, COBIT control the objective, provide the critical insight needed to outline or mark out clear policies and good practice for information technology. That is, you can also use COBIT to control objective. That is, all the bad one that you don't need, you can use COBIT to, you can query COBIT to remove it and add the other one that you feel that it is a good and important for the operation of the company to work effectively. So COBIT, one of the aspects of component of COBIT is it's also used for control objective. Now, audit guideline. COBIT can also be used for audit guideline, the actual activity to perform in line with control objective. The audit guideline constantly and consistently audit procedure in order to achieve its objective. So you can also put audit procedures and guidelines as one of the components in order for you to work effectively and efficiently, and the objective of the audit will also be what be achieved. The implementation tools implement the procedure necessary to do the job. It relates lessons learned from organizations that quickly and successfully applied COBIT in their work environment, and lead management to ask about each COBIT process. So you can also use COBIT to implement policies. You can implement policies and set rules and regulations through COBIT on how you want the software to be used in that particular organization. So these are the components of COBIT and what COBIT can help to do on all those accounting software and all the software in order to make our audit work and accounting work more, in order to make our audit work and accounting work effectively, efficiently, and also save time and reduce stress. And at the end of the day, it's going to help us to make a correct opinion on the financial statement of that particular organization using all this accounting software. So COBIT is just like that battery, since that tool that makes that software to work very well. And component of COBIT, you can use it for control objective, for audit guideline, for implementation tool, for framework, for executive summary, and for management guidelines. Please, I hope we understand COBIT and how it works now and the components. Okay, so let us proceed. I think we are going to the advantages. So now, computer-assisted audit techniques. We now have CAT. We are finished with COBIT. We now have CAT. What is now CAT? That CAT is techniques that enable auditor to use computer system as source of generating audit evidence. You know, we have talked about COBIT. Now, this CAT is that techniques that enable auditor. Is that techniques embedded on that accounting software that makes the auditor to generate audit evidence. I hope we are following. This CAT now is that techniques that the auditor use on the computer system to serve as source of generating audit evidence. So now it's a computer technique used by auditor to obtain audit evidence. So that is, we can use all this software to generate audit evidence, and that's what CAT is all about, computer assisted audit techniques. So type of CAT, we now have audit software and test data. Type of CAT, we have audit software and test data. So what is now audit software? So I've explained the meaning of audit software before from the beginning. So, but let's see. Audit software, these are computer programs used by auditor to extract information from client computer-based information system for use in the audit. The information of a client is extracted using computer for the purpose of audit. The main type of audit software, interrogation software. This program is to access client file and record. You can use it to access client file and record by extracting data for the purpose of auditing. So audit software can also be used as interrogation software. Then interactive software. This software is used for interrogation of outline computer system. Now this you can use to query some outlines of the computer system used in that particular organization. Don't forget, we said we can use audit software as interrogation software in order to access client files and record. Then interactive in order to query the outlines of the software used in that particular organization. Then let's go embedded or resident software. This software is used to monitor and review transactions as they are being processed by the client. So interrogation software, it is used to access client file and record. Interactive section software, it is used to interrogate the outlines of the computer software they are using in that particular organization. Then the last one is resident or embedded software. This one is used to what? This type of software, this type of software is used to monitor and review the transaction that the client is doing in their own end. So these are the types of audit software under what? CAT. We have interrogation software, we have embedded software, and we have what? We have interactive software. Please, are we following? Everybody, are we following, please? Okay. So now, test of data is another type of CAT as one of the software to be used as an auditor. What is test of data? The test of data is used to process a sample of transaction in the client computer-based information and compare the result obtained with predetermined results that the auditor will have expected. The test of data used primarily for test of control. We all understand the test of control when we talk about the analytical review of particular transaction in an organization. Where I said yesterday, analytical review is that the last year they reported 2 million as revenue. This year they now reported 20 million. So by using analytical reviews, just to know the percentage increase from that last year to this year, that is what make that revenue to increase from 2 million to 20 million. So we can use this test of data to query all these things in order for us to determine the particular thing that they are actually doing in that particular organization, using test of data as one of the audit software. That is test of data. We can also use it to query test of controls, the transactions that the clients are doing in their particular organization, and compare it with what your own software give you and marry it together in order to form an opinion whether the company are doing the right thing or not. Please, I hope we are following. I hope we understand that test of data now. Test of data primarily is just to compare the result obtained from your client using their software and your own software in order for you to check if there are differences and also correct where necessary. So the technique used to obtain evidence if client application is operating effectively in a given system. Embedded audit software. Embedded audit software. It is audit software built into client computer system, temporarily or permanently, to allow auditor to carry out tests at the time the transaction is being processed. So embedded software is this other type of software that it will be installed in the company software. That is, whenever transaction they are doing in that company, auditor will be receiving a notification, and auditor will be able to check through in their own end in order to monitor their transactions and correct where necessary if wrong things are being done. So that embedded software, just like that thing that, just like when they say they insert chip in someone's body, that chip like, or car tracker, that car tracker will be inside the system, inside the car, so that when the car is stolen or something happened, you'll be able to track the car to where they took the car to. So it's the same thing as embedded audit software. That is, it is that that thing that the auditor can use to they will just install it in that client's accounting software, so that every transaction they are doing at their own end, the auditor will be seeing it. Yeah, just like they clone that software. So anything you are doing, I'll be seeing it here, and I'll correct you where necessary if you are doing the wrong thing. That is embedded audit software. Do we now understand now? Auditing, they are under CAT. We have audit software, we have test of data, and embedded audit software. So everything you understand, the COBIT, the computer in audit, the CAT, and everything, the type of CAT. Now, what is now the advantages of CAT? What is the advantages of that computer software used by the auditor? What is the advantages? Number one, they give auditor opportunity to test and test all the client operational system rather than just relying on it. This CAT, one of the advantages is that it gives the auditor opportunity to test run the client operation, what the client is doing. It gives the auditor opportunity to test run everything rather than relying on the on it. Instead of relying on what the auditor give you, what the accountants give you, or the internal control, as the case may be. By using CAT, it gives you an opportunity as an auditor to test run the client operational system rather than just relying on what they give you. So it means that before they bring the result, you already know what they will bring, what they are going to give you, and how the system operates. So by using CAT, it gives you an opportunity to test and test run the operational efficiency and system of a particular organization rather than relying on the information they will give you. Please, are we following? I hope we understand that one. I hope we understand. Everybody, please, let me see your emoji. Then again, it gives the auditor ability to test large number of transactions within shortest time. That is, it gives auditor to test particular transaction, ability to test the large transaction in a short period of time. Then also it allows the practitioner to test effective control of program in the system. That is, it also helps the practitioner, the auditor, to test the effectiveness of that control they put together as the program in the system. So what is the advantages? Cost of purchasing or developing the program is always high. Then cost of keeping the program running up to date, it's always high. That is, generally CAT is costly to use. The cost of training the audit staff for usage, and the cost of that you use to train your staff in a designation area is always high. Then the time of installing the program in the client system, that is the time that you use to install this thing in the client system, is always for a long period of time, and it's time consuming actually. So these are the disadvantages of CAT. It is costly and it is time consuming. So that is that about CAT. Everything that relates to CAT. So, and boom, by next week we move to the arts of our advanced audit and assurance. Normally this class I used to take it 2 times because it is very, very short. It is not even up to half of this thing, but we need to take it very, very serious, because there we are going to know how all those standards are being embedded in that financial information before they become a whole financial system. So this is where we are going to stop for today. I hope you are able to get something from this class today. From the audit planning, the the audit risk model, the business risk, the financial statement risk, the audit risk, the materiality, the performance materiality, and everything that has to do with the materiality. Then computer in auditing, the COBIT, the CAT, the type of CATs that we have, the embedded software, the test of data, the audit software, the advantages and disadvantages, everything are there for us to read. So if you are just joining for the first time and you need the summarized notes, please reach out to me in my DM so that I can get a copy. So this is where we are going to stop for today, and I'm going to update the update it and pin it in that
Auditor,
group.
more strength, more strength, more strength.
Thank you.
Thank you, sir.
Thank you. I appreciate it.
More
So
strength. Have a
this is
nice
where we are going
weekend,
to
sir.
stop. And you too, have a wonderful evening. Good night, everybody. Bye.
Bye-bye.
Bye.
Bye-bye, sir.
Thank you, sir. God bless you.